Well, I think if you look at Australia, the materials sector has been a preference of ours for some time, but you're now well through the worst of the valuation adjustment for the banks. We've had the Royal Commission actually deliver its outcome, and Australian growth is rebounding very significantly, as it's one of the geographies that's probably handled the COVID situation better than elsewhere. And again, you've got a domestic institutional investor base in Australia that's quite able to support domestic equities. If you look at the adjustment that we're getting in China, Korea, and Taiwan, those are the markets where the retail investor has been really driving valuations and this valuation overshoot. And you haven't had such an extreme retail investor participation in either Australia or Singapore or India. Within the Indian market, again, we're watching COVID very closely, but broadly speaking, India's performance on COVID is better than what we're seeing in some other parts of my coverage, most notably in Latin America and EMEA. We had a constructive budget in relation not just to continued fiscal support, but also reform in relation to privatization. We've got the very controversial rural reform, but that may well deliver a productivity improvement. And so in terms of GDP growth and the kind of countries that we expect will exhibit the most V-shaped bounce back, India is right at the forefront of that. And then for Singapore, again, it's a reflation, reopening trade. It's handled COVID very well by global standards. And it's also somewhat positively geared to the upside surprise that we're getting in oil, which again is an interesting feature of the current environment. The energy sector is starting to work quite well globally.